A few hours ago, the Bank of England surprised the market, not because of the interest rate decision, but because of something most traders completely ignore. Let me show you what happened and how I made 1% trading this news. So first of all, we need to know what the market was expecting regarding the Bank of England decision. So you can check what we call the short-term interest rate. And as you can see, the probability to get a nod was about 84.1%. And for a cut, it was only about 15.9%. So as you can see, the pause was fully priced in, fully integrated in the price. But as I said at the beginning, the surprise was not about the interest rate. So let's dive into the event trade scenario. So this is something you can read before the central bank decision to be fully prepared to trade the decision itself if you have a surprise. Because inside, as you can see, you have a full summary to know what's expected, what was the latest decision, the latest forecast regarding the inflation, the GDP, the job report, and you have access to a strengthening scenario and weakening scenario. So you have, again, the full reasoning. And if I talk about the weakening scenario, it's written. Dovish surprise scenario. The MPC hold at 3.75%, but the vote is more dovish than expected. For example, 5-4 to hold, signaling that the committee is close to cutting again soon after December's narrow decision. So the weakening scenario is 5-4 split vote. And guess what happened? This is exactly what happened. If you check what was expected through the event calendar, as you can see, it was 7 for unchanged and 2 for a cut. Before it was 4 unchanged and 5 for a cut. All right. And as you can see, we had a surprise because if I go back, as you can see, 7 p.m. statement, the Bank of England odds rate at 3.75 as expected, vote split 5-4, expected 7-2. And you have the name who decide to go for a cut. Breeden, Dingra, Taylor, and Ramsden who vote for cut to 3.5%. So basically 25 basis points cut. And at the end, it's not only about the interest rate decision, because as you can see, it was unchanged. It was the same. So the probability was right. The 84 probability was completely right. However, the split vote was the surprise. Because now if you look about the vote, it's written. The Bank of England hold key interest rate at 3.75 in a 5-4 vote. You have the full name again. Judgment on further easing will become closer call. Slowing easing will provide space to assess neutral rate. Guidance, the Bank of England says interest rate likely to be reduced further. So this is literally dovish. Only using this sentence, it just proved that it's more dovish than expected, despite the vote. And then they talk about the economy. They say the risk of inflation persistence now less pronounced. So the risk is reducing. So if the risk of inflation is reducing, they can cut even more. So they can be more dovish than expected. And this is exactly what happened. And then, of course, they talk about the forecast. So they see inflation at 1.8% in first quarter 2028, 2% in first quarter 2029. And then you have the full reasoning, the GDP, growth, etc. Okay. And then you have the commentary for each voters. Bailey, Ramsden, Peel, Taylor, Dingra, Breeden, Mann, Green, Lombardy, and Green. So you know exactly what they say. And of course, the fiscal. And the reaction is fully explained on PMT. In reaction to the 5-4 vote split, Cable, which is the name of GBP USD, fell from 136.10 to a fresh session through of 135.47 in an immediate reaction before extending lower. And look, this is exactly what happened right there. Look at this candle. It's not manipulation. It's because of this dovish surprise, the split vote. And if you look, the reaction itself, it's about 66 pips, which is a lot. Yes. And again, is not because of the interest rate, because they kept the rate unchanged. It's because of the split vote, which is more dovish than the market expected. So of course the market has to reassess and has to adapt to this dovish surprise. And now, if you look the market money pricing, it's written. The market pricing has shifted dovishly. March minus 10 basis points instead of 5 before. April, this is where it's interesting, it's now 26 instead of 18 before. So you have a difference of 8 basis points. And December, it's 44 instead of 36. And look, April is what matters. Why? It's right under there. Post-announcement, markets now expect the next 25 cut in April instead of July. Previously, it was July. So, to make it short, before the decision, the market was expecting the rate unchanged, and the Bank of England to cut rate in July again. And now, because of this split vote, which is more dovish than expected, the market start to price the next 25 cut in April, which is way earlier than before. And this is exactly why GBP/USD weakened after that. And I took advantage of that. I took a trade during this news. How? This is my trade. I will just show you now on the screen. This is a trade I took, okay, with a risk reward of 1. Now, how is it even possible to catch the move? Well, if you use pro-market terminal, you can do better. You just turn on the analyst stream, just there, and just listen to what they say. So basically in 1 second, you have the information. You know exactly what they said and what they decide about the interest rate. And it's so fast. And then of course, have the event calendar and the real-time news. Because look, in the real-time news, I know exactly what happened. I know exactly what happened. For the cable, for the yield, as you can see, yield future immediately rose from 90.25 to 90.69. I know exactly the market reaction. I know what's happening and the why behind the move. And of course, this is a scalp trade. But look, now, because of this news, taking a short on GBP/USD makes sense for a swing trade. Why? Because this is a catalyst. This is more dovish than expected. So of course, now the market will have to price this change. And the GBP will just weaken even more. And we can see it if we just analyze the current risk sentiment. Look at this. This is because of the decision, 7 p.m. And look, the GBP is weakening even more. And still, the CHF is going up and the US dollar is still quite strong. So, taking a swing trade using this catalyst makes sense. And again, this is how real trading really works. You can just use pro-market terminal for everything. And I showed you everything. Before, with the event trade scenarios, during, using the real-time news, the analysis stream, and after, the trade I took, and the full analysis and what the market is currently pricing now. I told you, the 25 cut in April instead of July, which is more dovish. And when it's more dovish, then the GBP is going down. It's really simple. And you can use this kind of central bank decision for scalping, but also for day trading or swing. Because personally, I took a trade. I'll show you the trade just earlier. Okay, this is a scalp, quick in and out, because I want to take advantage of the volatility because we have a surprise. Now, of course, for swing trade, I'm waiting for bigger retracement to take a short position on GBP/USD. And this is definitely something I'm considering right now because the market will have to adapt to the context. And as a professional trader, I need to adapt to the context. So if I know that there is an opportunity because it's more dovish than expected, I want to use this central bank decision as a catalyst to probably short GBP/USD, for example. And this is how real trading works. And by trading the news, you can still add 1 to 3% per month, which is quite a lot. By using prop market terminal, you have all you need. You know the why behind the move. Because let's say you just watch the price, okay, the price is going down. But if you just rely on the chart, you don't know what happened. Because still, most beginners combine a trading view chart and the event calendar, but the event calendar just gave you the interest rate expectation, nothing else. You don't have any information about the split vote, who decide to vote and why, and what the market money pricing start to do now because of this dovish surprise. And this is what matters in trading. You need to adapt to the context. And by using prop market terminal, you have all you need: the real-time news, the analysis stream, the event calendar, analyst report, bank research, and much more. And tomorrow, we'll get more bank research talking about this decision itself. And I'm 100% sure some of the biggest banks, such as Morgan Stanley, JP Morgan, ANZ, Citibank, others, will recommend going short on the GBP because of this decision, which is way more dovish than expected. And this is how real trading really works. So if you want to get access to prop market terminal and know the why behind the move using institutional data, I put the link in the description. Same, if you want to take your trading to the next level, having a proven strategy and knowing the why and how to make the most of it, you can book a free call with me. We'll talk about your trading situation and see how we can just implement this institutional process into your current trading strategy to help you to achieve your goals. If you want to become a funded trader, trade with your own capital, it doesn't matter. It's all about having the right skills and having a proven strategy using real data. Thank you again, and see you for the next one.